everyone. If accounting feels confusing, don't worry. You're not alone. In this video, we will clearly understand journal entry step by step with simple examples. What is a journal entry? A journal entry is the first step in accounting. Whenever a business does any transaction, buying, selling, paying, or receiving money, it must be recorded. This record is called journal entry. In very simple word, journal entry means writing down what comes in and what goes out. So what is the memory trick to remember? No journal entry, no accounting. Journal entry is important because accounting starts here. From journal entries, we prepare ledger accounts, trial balance, and finally profit and loss accounts. If journal entry is wrong, everything after that will also be wrong. That's why students must master journal entry. So every journal entry has two sides effects. That is what called as basic rule of journal entry. What are those? Debit and credit. One account is debited and another account is credited. And remember one golden rule, total debit amount must always be equal to total credit amount. This concept is called dual aspect concept. So to remember this, debit is equal to credit. That means it is always equal. Now, let's make debit and credit very easy. What is debit? Debit means the one who receives. Credit means the one who gives. So, just ask one question. Who is receiving? That person will be debited. Who is giving? So that will be credited. To remember, what is the memory trick to remember? DR and CR. Next, let us check on golden rules of accounting. Why is this required? This is required to decide debit and credit correctly. That is where we use golden rule of accounting. There are three types of accounts here. First account is personal. When it comes to personal, debit the receiver, credit the giver. Next, it is real accounts. Debit what comes in, credit what goes out. Nominal account, debit expenses and losses, credit incomes and gains. These rules helps us to avoid confusion. Okay, next let us see the correct steps to pass journal entry. First, identify the accounts involved. Second, find their type, whether it is personal, real, nominal. Then apply the golden rule. Fourth, decide debit and credit. Finally, write the journal entry with narration. Got? So, what are the steps? Identifying, classifying, applying, deciding, and writing down the journal entry. Next, this is what the standard format of a journal entry. So here you can see date column, whereas in date, this column contains the date of the transaction, the month, and the accounting year. So the year is stated simply once at the top of and does not require repetition with this. Okay. And next it is particulars. So what is particulars? This column records the accounts impacted by the transactions by naming those required debiting or crediting. It's written down like debiting or crediting, the account that needs to be charged is the first line, and it will be ending up with DR, which stands for debit, is at far right of the same column. Okay. So after providing space from the initial line left margin, the account is to be paid to mentioned second line, which starts the preposition to. In the third line, the narration of the entry, that is detailing, will be written here. So that is about particulars, and also it will be followed by narration. Okay. And next it is about ledger folio. So the transactions that are recorded or else entered in the journal are posted to various related accounts in the ledger, which is further elaborated upon in a separate instructions. So we input the page number of that ledger file column where account associated with the entry is opened and journal entry is posted. Okay. So next comes with amount, that is debit. The debit amount is recorded in this column on the same line as the debit accounts. And last column is about credit column. The credit amounts needed to be applied to the line displaying the credited account is indicated in this column. So let us check with an example. The transaction goes like this. Owner started business with cash rupees 50,000. So cash is coming into the business. Cash is coming into the business. So the cash should be debited. 50,000 amount will be debited. And the capital, that is capital is the owner, a personal account. So the capital will be credited. Okay. In that case, the journal entry will be cash account data to capital account. What is the narration for this? Narration is being cash introduced by owner will be the narration. So to remember, what might be the memory trick? Owner brings money to the business, so capital will be credited, right? Let us check the next example. Next example is about purchase of goods for cash, rupees 10,000, right? So purchase is an expenses. We are spending money to get some goods into business. So purchase is an expense. Purchase account, it's a nominal account, so it need to be debited, right? And cash is going out of the business, right? So cash is credited here. So what will be the entry? Purchase account debit to cash account. Got? So memory trick will be expenses are always debited. Let us see one more example on this. Paid rent rupees 5,000. Rent is an expense, so it will be debited, and cash is going out of the business, so it is credited, right? So the narration will be being rent paid in cash, right? So what is the memory trick? Paid will always be cash credit. So students, usually you'll make often mistakes on these elements. What are those? Forgetting narration, right? Then wrong classification, maybe wrong accounts classification, and debit or credit are not matching, right? So avoid these mistakes and your accounting will become stronger. So let's quickly revise whatever you have learned, right? Journal entry is the first step of accounting. Every transaction has debit and credit. Golden rules helps us to decide whether it is correct, right? And practice is the key to mastery, right? So practice daily. That is the secret. If you found this video helpful, don't forget to like, comment, and subscribe to the channel. Thank you for watching.